do I have the correct financing setup?
The financing setup's a tricky one, depending on size of business, and it does, depending on what sort of tech you want to use, how big your business is, what sort of information you want to get out of your finance system. There is different bits and pieces that you need to consider. Now, I'd urge you to get someone that knows what is right for recruitment agencies, what programs talk to each other to make your job as easy as possible, and what information you need to get out of it so the right information is going in. I mean, most accounting programs like Xero, for instance, they're similar to something like Bullhorn in a way that, the rubbish you put in is the rubbish you take out. If you want good decision-making information in Xero from a financial perspective, you do have to pump the information in. Now, Xero is a good product. There's bigger ones out there that are also useful. I mean, it does matter on the size of your business, but it does come back in my mind to that idea that if it's rubbish in, rubbish out. If you want decision-making information, you've got to put it into your system.
And with the financing, what should I consider as an agency owner? So there's obviously the percentage they're charging, which typically is on invoice value, a percentage of the invoice value they're charging. But two, should I really be considering, what happens if the clients don't pay on time? What are the fees they charge?
Yeah, with the financing thing, it is a big one. I think a lot of people get sold based on an interest rate, which is not even half of what most financiers charge as far as their overall fee for the the line of credit. Now, it is important to look at each of them individually and do the analysis. If I've got X amount owing for X amount of days, what does it actually cost me? Now, people go, they're only charging me 8% interest. Great, that's fine. What's the management fee on those? It's only 1.5%. Well, that doesn't seem like a lot, but that's on every single dollar, regardless of days out. It's just when you upload it to the portal. That can become hundreds of thousands of dollars quite quickly.
And I think much like the outsourcing question, it's something that you need to consider again and again as your business grows, because what might suit you as a 2-person business with 4 contractors out, it's probably worth it because you don't have the cash when you're starting out to self-fund. But in a year's time, when you've all of a sudden got 100 contractors out, what are the fees they're charging you? Because that could mean you could actually have a CFO in-house. You can self-fund because at that stage you may have enough cash in the bank. But all these considerations to make year on year to go, is this setup the right one for us as we stand right now as a business? Not what was easy a year ago when we were 3 people.
Yep, correct. It is a really important one. And I think the other thing that's really important to consider is if there is any type of line of credit, whether it just be a normal overdraft, whether it be a term loan, whether it be debt of finance, you've lent money against your house, whatever it is, it's always important to understand that the business needs to run without this line of credit at some point in time. Otherwise, if you become reliant on it, it's a bad credit card and you will pay for it. So make sure the business is viable without this line of credit in a period of time. I mean, the cash flow funding to grow is what it is and you'll always need it. But if you become reliant on it, I did hear one guy say it's like crack cocaine. You'll be addicted to it and you'll never be able to get off it, and the banks are the ones that win.